Good morning and welcome to the Killik & Co market update. This week we've had some rather bad news from Unilever, which has decided to choose the Netherlands over the UK as the location for its legal entity. Unilever is a huge global consumer brands company and it owns a number of the brands on this slide. To name just a few, you've got Ben & Jerry's, Hellmann's, Lipton, Radox, a huge number of brands that are very well known across the world. So the fact that Unilever has chosen the Netherlands over the UK, I think is a real shame for this country. At the moment, Unilever does have a rather unusual corporate structure. It has two legal entities at the moment, one in the UK, one in the Netherlands. It's got two stock market listings and two sets of shareholders. So that is quite unusual, it's quite complicated, and the company was quite keen to simplify this by switching to a single legal entity. So it has been deciding over the last few months where to have this legal entity, and it has announced this week that it has chosen the Netherlands. It did specifically say this is not related to Brexit, but nevertheless, I don't think this is good for sentiment in the UK, particularly at a time when confidence in the UK investment landscape is fairly low. At the moment, Unilever is one of the largest companies in the FTSE 100 index. As you can see here, it is number 3 by market cap, currently worth about £111 billion, so a huge amount of money there, and that's second only to HSBC and Royal Dutch Shell. However, even though the company is retaining its listing on the London Stock Exchange, it probably won't be allowed to remain in the FTSE 100 index because it won't have a legal entity in the UK. So that could represent quite a significant change for the FTSE 100 index going forwards. Also this week there have been some adjustments to the UK's inflation basket. Now inflation and price rises within the UK are focused on a kind of imaginary basket of goods that the government assumes that the average person buys. So every now and again this imaginary basket is adjusted to account for things that we're buying more of or buying less of. And I think it's quite interesting to look at what's gone into the basket and what's come out, because it does really show the changing tastes of the UK consumer. So this quarter, things that have gone into the inflation basket are exercise leggings, so that makes sense to me. We know that people are using the gym more, they're exercising more, we're spending more on sportswear, and people are also wearing more sportswear outside of the gym. So it makes sense that exercise leggings have gone into that basket. Big televisions is another. I think the government is conscious that we're reluctant to own small televisions, we're more likely to own larger ones, so that's been represented within the basket. And also we're spending more on action cameras, so things like GoPros. Things that have come out, the first one is particularly interesting, that's cash machine charges. So the fact we're no longer accounting for that in our inflation figures, that shows to me that this charge is very irrelevant to a large number of the UK population because we're so much more likely now to use online transfers and electronic payments. Other things that have come out, nightclub bottled lager. I think everyone knows that the number of nightclubs in the UK is declining, so the drinks sold within them are declining as well. And also pasties have been taken out. Apparently that's because we now have such a wide range of fast foods to choose from that we are spending less specifically on pasties. So that's how the UK's inflation basket has been changed this quarter. And lastly this week we have had the so-called spring statement from Philip Hammond, the Chancellor. This is not strictly a budget, it's more just an update on the state of the UK's finances, but it was slightly more positive than some did expect. The Chancellor does often get referred to as Eeyore in the press because he is seen as being quite gloomy. But last week he came out and said he was feeling quite Tigger-like, and he said he was feeling quite optimistic about the UK economy. Some key points from his statements. The first one was that he expects UK growth this year to be 1.5% rather than 1.4%. Not a huge change, but at least it is a move in the right direction. He did also say he expects inflation to fall from 3% to 2% before the end of the year, so that's a good thing for the UK consumer. And lastly, he said that he expects wages to rise more quickly than prices or inflation over the next 5 years. So if that turns out to be true, that's definitely a good thing for the UK consumer. But moving on to the week ahead, we've got a few Killik companies reporting, namely Ocado, Tencent, the Chinese company, Accenture, Nike and Heidelberg Cement. That's it from us. Have a great weekend and we'll see you next Friday.